Elon Musk just announced today that he is stepping down as the CEO of Twitter. This is what he posted on his Twitter account just recently. Excited to announce that I found a new CEO for Twitter. She will be starting in about 6 weeks. My role will transition to being the executive chair and CTO, Chief Technology Officer, overseeing product, software, and Synopsys. Elon Musk purchased Twitter October of last year for $44 billion. And as soon as he purchased the company, he made a lot of changes in the Twitter organization. Even going up to the purchase of Twitter, there was a lot of legal drama. If you remember, first Elon Musk wanted to buy it, and the Twitter board put up this legal fight essentially saying that you can't buy it, that you can't come in and change the company. Then when he got further into the company, he realized how many fake accounts there were. The legal battle switched because Elon said, I don't want to buy it anymore. And the Twitter board essentially said, well, you can't not buy it anymore. So it was a huge dilemma of him trying to purchase the company. It was a public dispute and a lot of things happened. Ultimately, he ended up buying it in October for $44 billion. As soon as he came in, he became the CEO of Twitter and made a lot of changes. He made changes on the platform itself, and he made changes in the company, meaning the way that the company managed its employees. On the platform itself, some of the changes were loved, some of them were hated, and it created a lot of stir, and that's what he wanted. He wanted to get attention to Twitter, and he wanted to bring it back to life. So some of the things he did, people hated. Some of the things he did, people loved, like the blue check mark that you can pay for. Some people hated it, some people loved it. But ultimately, Facebook copied Twitter. They did the exact same thing that Elon Musk did at Twitter. So that clearly has sparked some interest by other companies. Then on the company side, meaning managing employees, he made a lot of changes there as well. Again, some people hated it, some people loved it. And this is not really a political issue. Let's talk about this from a business perspective, because he bought this company for $44 billion. It was bleeding cash. It was losing money. It had a lot of employees that didn't necessarily need to be there. And it had a lot of employees that were kind of just benefiting from big salaries without a lot of work. So he wanted to change that culture. And as the owner and CEO of the company, he had the right to do so. And he completely changed the culture. A lot of people left. A lot of people didn't want to work for Elon Musk. A lot of people didn't agree with what he was doing. And a lot of people didn't want to do what he was doing. So they left. And some people that didn't leave were asked to leave, or they were forcefully kicked out. And so he made a lot of changes inside of the organization itself. Some of it was hated, some of it was loved, but he made a lot of changes at Twitter. Now, with all of that going on, he made it pretty clear that he didn't want to stay the CEO of Twitter forever, because he's busy also being the CEO of Tesla. He's busy also being the CEO of SpaceX. So he has a lot on his plate. And he has talked pretty openly that if he finds a good CEO, he will step down as the CEO of Twitter and have them take that spot. Well, just today, he announced that he has found a new CEO. He didn't disclose who this new CEO is. He said it's a she, so that's all we really know so far. I'm sure that the information will be disclosed soon, but that's where we are right now with Twitter. A lot of shakeups happening there with Elon Musk and the whole Twitter organization. This brings me now to the topic of what's going on in the economy, particularly with banks, because Twitter is facing some financial struggles, partially due to the fact that advertising revenue is falling. And advertising revenue is falling as a byproduct of the slowing economy. And another sector which is showing the pains of the economy is none other than the banking sector. And we just saw another big shakeup in the banking sector today, with PacWest announcing that they lost 9.5% of all of their deposits just last week. Now, we did a whole write-up on this in Market Briefs, my free financial newsletter, which is why if you have not joined Market Briefs yet, I highly recommend you do so. It's a completely free newsletter where every day my team is breaking down what's happening in things like the banking sector, the housing market, the stock market, the crypto market, the global economy, and our own economy. You can read the newsletter in less than 5 minutes every morning, and it's completely free. So if you have not joined Market Briefs yet, I got the link to how you can join down in the description below. But what happened today with the banking sector was PacWest, which has been facing a lot of scrutiny and a lot of issues over the last number of weeks, announced today that another 9.5% of all of the deposits were pulled out last week. And the reason, like I was saying last week, why people probably pulled their deposits out were that the stock was crashing. This is exactly what I was talking about last week, where PacWest announced publicly that they had lost a huge amount of deposits. When they announced this, investors who owned a piece of the PacWest Bank started selling off their stock because they were worried about the health of the company. Why were they worried about the health of PacWest, the company, the bank? Because our banking system is not designed to stay in operation if people pull their money out. So when PacWest announced that a lot of people pulled their money out, investors who owned the bank, who owned the stock in the bank, got scared and they started selling off the PacWest stock. Well, when they started selling off the PacWest stock, their stock crashed very hard. And when the stock crashed very hard, that brought a lot of new, fresh, bad publicity to PacWest, which then created more fear. Now, when you're scared about your bank and you have cash sitting in that bank, what do? You go to the bank, you pull your cash out and you put it somewhere else where you feel like your money is safer. And that's what I was saying, where it's essentially like a self-fulfilling prophecy. If people pull their money out of the bank and then they announce that people pull their money out of the bank, then people get scared who own the bank, the stock, the shareholders. They sell off the stock price crashes, and when the stock price crashes, it creates more fear, causing more people to do a bank run. And that's exactly what they announced today, that a lot of people pulled money out of PacWest, and that's why today we saw the PacWest stock begin to crash again. So now the question is, what's going to happen next? PacWest said that they're still doing okay, that they're still managing their operations, but you have to imagine that the more negative press that they get, especially when it comes to the health of the bank, the more people that are going to want to disassociate themselves or their money from PacWest, which could cause more bank failures, more bank fears, and just more issues in the banking sector. Now, that's just one concern in our economy, but the big reason why banks have begun to fail is higher interest rates. Higher interest rates have caused the value of many assets like bonds that these banks are holding on to go underwater. That makes it more difficult for these banks to raise money. Well, what just happened recently is overseas in the Bank of England, what we saw is that the Bank of England also raised their interest rate now for the 12th time. The United States here has raised interest rates 10 times consecutively. The Bank of England just raised interest rates for the 12th time consecutively, and they did it by, I believe it was another 0.25%. And what they said was, if there were to be evidence of more persistent pressures, then further tightening in monetary policy would be required. AKA, if the Bank of England feels like inflation continues to be a problem out in the UK, they will continue to raise interest rates. Now, that's not too big of a surprise. We're kind of seeing the same thing here. But what we're seeing is in the UK, the United States, and many other parts of the world, we're seeing interest rates rise, and we're seeing central banks say, essentially, that if we continue to see high inflationary pressures, we will continue to stay aggressive on bringing inflation down. Now, this is a double-edged sword, because on one hand, the high inflation is hurting the economy. We are seeing an economic slowdown. This is a fact. This is not opinion anymore. When we got the latest GDP numbers, the latest economic numbers, it showed that our economy grew by 1.1%, which is way slower than what economists were predicting. We were predicting around 1.9%, at least that's what economists were predicting. So we are seeing the economy slow. A big reason for that is the higher inflation numbers. Now we're seeing the higher interest rates start to play their effects on the economy. What are these effects? Well, one effect is struggles and pain in the banking sector. A second effect is struggles and pain in the startup sector, because if you have a startup, if you have a company that's relying on outside money, venture capital or investment dollars or debt, borrowing money or getting these investment dollars are much more difficult, and it has caused the valuations of many companies to fall like a rock. So that's the second effect of the higher interest rates. The next thing that we're going to see happen with higher interest rates is more of a trickle down into other parts of the economy. And we're seeing different sectors of the economy start to feel pain because of the economic slowdown, partially due to the inflation, partially due to the higher interest rates. But this is where now, again, our central bank here in the United States, the Federal Reserve Bank, is working to do two things. They want to bring inflation down, and they want to keep unemployment low. Well, right now, unemployment is low, but inflation is still very high. You raise interest rates, it helps to bring inflation down, but it hurts the economy. Right now, our unemployment is still very low, but we're seeing more and more kind of breaking points in the economy. We're seeing pain in the banking sector. We saw Bed Bath & Beyond go belly up. We saw other media companies, Vice Media, we saw BuzzFeed News, both of them are bankrupt or on the verge of bankruptcy. So now we're seeing different types of pain in the economy, and the question is, who or what is going to break first? Is it going to be the economy, or is it going to be inflation? And this is that tough question that the Federal Reserve Bank is hoping they can create the soft landing, but we still have a lot of ways to go with inflation. Our most recent inflation data says that CPI was 4.9%, core inflation was 5.5%, still extremely high inflation, but the economy is now starting to see more pain as well. So what will the Federal Reserve Bank do? Well, only time will tell, but this is where now your job is to be aware of what's happening, look for opportunities, and be prepared to capitalize on opportunities, because the reality is when you see economic pain, it creates opportunities, but you can only capitalize on the opportunity if you're educated and you're prepared to capitalize on the opportunity. Now, of course, we'll be keeping you updated here, but also market briefs if you haven't joined yet.